I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice to individual investors for 55 years. Brad, it's we're going to talk market today. It's There's no getting around what's going on in the market the last 3, 4 weeks. It's been rough. It's rough out there. So to help navigate the choppy waters, we're dispensing with our usual format of defend the take and our big three. And we're just bringing on several Cabot analysts, starting with Mike Cintolo, our chief investment strategist, to just talk about what's going on, where they see things going from here, how investors should sort of navigate these choppy tariff infested waters, and all that good stuff. So we will get to them in just a minute. One bit of housekeeping I wanted to mention. We are hosting for the first time in 6 years. We're holding our what used to be annual Cabot Wealth summit in Salem, Massachusetts. Cabot's headquarters is actually this year. We're calling it Investing Masterminds. We're holding that the week of August 13th through 15th. Actually, it is August 13th through 15th in Salem, Mass. Registration is now open to anyone. So you can join all the analysts on today's podcast and several others, all Cabot analysts at the Investing Masterminds in person. In the week of, again, August 13th through 15th, by going to cabotwealth.com/street. Attendees will gain actionable insights, including every analyst's top picks and proven strategies to elevate your investing game. It's a great time. Brad, you've never done it because you were not here 6 years ago. COVID sort of switched it to an all online thing. Which was okay for one year, and we did another year, and it wasn't so much fun. So now we're finally getting back to in person. It's great to meet all you Cabot listeners, readers, subscribers in person. And Salem is beautiful in August. We do some fun activities outside of the conference, but then you get to hear from literally every Cabot analyst. I get to interact on a more personal level. So again, go to cabotwealth.com/street. You can check out the agenda, register now. You take advantage of our early bird pricing, which saves you $800 off the regular price. And if you're a current Cabot Prime member, you can save an additional $200 by calling our customer service team at 1-800-326-8826 or emailing support@cabotwealth.com. But for a good place to get started, just going to cabotwealth.com/street. And again, that's August 13th through 15th. Okay, so that's housekeeping up top. And then in just a second, we are going to welcome on Mike Cintolo and get our guest-filled podcast started here. All right, we welcome on Mike Cintolo, Cabot's chief investment strategist and growth expert, and Jacob Mintz, our options guru. As I mentioned at the top, it's been a tricky market. Tricky is a kind word for the last 3, 4 weeks. Tariff dominated market. Some somewhat positive signs the last couple of days, especially today as we record this. But bottom line is the S&P hit correction territory yesterday after the Nasdaq had already hit it a few days before, maybe a week before. Mike, I'll start with you. What are you seeing you mentioned that I think the 52-week lows, which you keep a close eye on in the New York Stock Exchange, maybe aren't spiking as high as they have in past as a possible silver lining. Are you seeing any other silver linings out there right now?
Yeah, well, first, it's not that they're not spiking as high, but the peak number was last Tuesday. I mean, these things can go away. We can fall 5% on Monday, and all of a sudden there's 1,000 new lows, and that wipes it away. But the longer it does go, it's just telling you that some of the selling pressure is drying up, I think, on the broad market. No, other than that, I would say, sentiment takes time to get dented. And in the short term, I think, we're finally hitting the point where more people are like, hey, what the hell, And so I know Investors Intelligence, which is just a survey, it's just sentiment, but it is kind of the granddaddy. It's been around 50 or 60 or 70 years. So that had more bears than bulls this week, which usually occurs toward a low, whether it's the low or not. And also me and Jacob has been more on it than I have, but there have been some of these former high flyers that have pulled back, 40% or whatever. And they kind of stopped going down, almost like when the new lows peaked, like last week and a half, 2 weeks, they've kind of stopped going down. They don't look good on an intermediate term basis, but so there's some of that stuff where you're starting to see, I would say the sellers might be a little bit sold out. There's already been some pukey action. So that's kind of what I'm looking at now. And then once we bounce, whenever we do, hopefully that's when we can kind of glean more in terms of where the money might flow and how strong the bounce is and that sort of thing.
Yeah,
Jacob, from options market, what is it telling anything positive? Are there any new call buys or anything interesting right now, or is it more of the
yeah,
same?
there's definitely some positive signs out there. Going to what Mike said about the stocks that I'm kind of watching that aren't going down anymore. It seems like Palantir, some PLTR, keeps holding that 80 level. It'll fall below it, on these really nasty days, but then it'll come spring back above. Nvidia is actually up, I think, like 5 to 7% this week. So the 115, 120 level keeps holding it in Nvidia. Avago, Broadcom, I'm sorry, Avago, AVGO, holding the 180, 185, 190 level. So there's definitely some of the former leaders are holding up. Now, unfortunately, partially because the selling has moved on to other sectors of the market. So there is some bad along with that good. In terms of the options market, the VIX is actually down on the week. It traded
Yep.
up close to like 28, 30 type range earlier this week. And even as the market broke down even further yesterday, the VIX is back down to like 22 today. So there is some positive signs. Now, I will say, talking out of both sides of my mouth, the VIX is pricing in at this level about a 1.5% move every single day. So the market continues to have to move a lot for the VIX to stay elevated. But it is starting to bleed in a little bit, which means the big traders aren't hedging nearly as aggressively as they were earlier last week. In terms of call buying, there's been some call buying in those leaders. The Palantir, there's a lot of call buying today. Nvidia, there was call buying today. So maybe traders are starting to load back up. Now, I will say it's not looking for a super short-term big move higher. It's more positioning for June, July, August, and beyond. So
Right.
there are some positive signs amidst the complete horror show that it's been.
Hmm.
Yeah, I'm glad you brought up Palantir because that when Mike was talking about the high flyers, nosediving for a little bit, up 8.5% today, almost 9% today. Nvidia's up 5% today. The thing that I'm sort of wondering about, is it just a relief rebound from them? You mentioned seeing some call buying there, but over the longer haul, um, are there spots where you're seeing a lot of strength, specifically with call buying?
No, unfortunately not. When there is call buying, it's kind of all over the place. There isn't really a theme that's standing out. It's almost like the theme of the day. So today it's former high flyers and AI stocks are higher, and so the call buyers start chasing into those names. I would say there's been some buying in Reddit, after an upgrade. I would say big picture, the biggest theme has been there has been some dip buying, but that dip buy, those option call buyers have gotten their hands broken every time they
Yeah.
reach for calls so far. So, it's tough to be buying the dip until I mean, Mike can speak to this more than I can, until there's a real trend higher. It's just, and we have a good day and call buyers start chasing, and then the next day it completely falls apart. So no, there hasn't been a great theme that I'm chasing along with them in terms of big call buying.
Mike, what are you wanting to see that would give you, a little more confidence that, the worst is behind us or near? What from the market would you want to see? Just continued decline in the, number of 52-week lows, or what is that signal?
It's not an indicator. I think it would just have to be seeing. There's not a lot of earnings reports these days, but like Rubrik today, RBRK, which we've been watching for a while, but that's like popping. So I would just like to see some growthy themes show some very, big volume positive action. So like it to me, like, so we still have a little Palantir, but like, so Palantir is up 5%, 10%. Like that's good. Up is good. I'd love to see, 3 straight days of like volume 75% above average and the thing ramps. Doesn't mean it's going to keep like going higher, but now you're saying like, okay, there's somebody stepped in with not that the call buys Jacob Falls, I think are big money, but I just mean somebody stepping up with the stock and like putting capital into it in a sustained way for at least a few days, so it's like a low can get in. If I see that across some stocks, then you're more confident, like, okay, now we have a low we can work off of, and then you can kind of do a little nibbling if you want to, or just judge that. But that's really the first step. Like I said that 2 weeks ago, and it's just been, except for a few hours here and there, it's been straight down. So we just need a low we can work off of in the market in some of these stocks, and then we can go from there. But right now it's kind of hard to tell because I was looking at the RSP, I think late last week was holding up well. I was like, oh, the average stock's holding up. We'll see what happens. And then this week it's just whoosh, so you just need to get a low to work off of.
If I could say something, it would be, I'm sure Mike would agree with us. It's if we finally get bad news and the market handles it and goes higher, that'd be a great first step. I mean, this week it's what we actually got good news on in terms of inflation, and the market fell. So we're still in just it's not great in terms of that kind of indicator. But maybe there's a tariff headline and the market goes down and then comes back to life, or we're just not seeing the wipeout just yet, and then the buyers step in. So that would be a great sign, is if economic data came in terrible and the market rallied.
Yeah,
Tariff came out, a headline came out that should shake the market and it went higher. That would be, a first good sign in my eyes.
That's a big point. I do remember the exact low day of the 2022 bear market was a horrible inflation report, and the market reversed higher, and that was low. Doesn't mean it has to happen that way, but that's a good point. Yeah.
Yeah, I think so. One thing I've been thinking about is the news being sort of almost irrelevant on a day-to-day basis, where it's like, yeah, there's a lot of reasons why it could be going down, but big money seems to be just selling. It's a steady distribution. They are just selling, especially the high flyers, right? They've got a lot of volume there. They can support increased selling. So it does feel like institutional money has taken a look at changes in tariff policies and things like that and said, hey, you know what, maybe our upside targets are a little bit rosy. Let's reallocate, and then let's start looking at let's lower our upside targets a little bit. And what I'm hearing from you guys is basically we just need a sign that they've decided to stop selling, sort of regardless of what the news item is. And they're like, okay, well, we're at a fair level. We can start accumulating again now, or we're seeing these more sustainable trends versus just like you said, Mike, whatever the headline of the day is. So I do think from an actionable point of view, sustained buying is probably a good thing to watch. I mean, shoot holes in that all you want. But
No, I think that's true. I'm not a news guy. Jacob's more on the news. I do think that there's probably more of a general sense that's like the exact details aside, unless something changes, unless all of a sudden everybody comes to a huge tariff deal and there's no tariffs or something like that. But I think the general view is like, there's going to be more restrictions on trade, so there's some of that. But what we're trying to find out is when that's priced in. The market's looking at September. The market's looking at October right now. It's trying to figure out what the world's going to look like then. So it's not so much the next quarter or two, in my opinion. So we just need to see when it's priced in.
And I will say this, if I want to be glass half full, I think traders have been de-risking for the last 3 weeks pretty aggressively. If this thing turns, and knock on wood, hopefully this thing turns, there's been a lot of put buying. There's been de-risking. If this thing turns, traders could be chasing this thing pretty, it could get aggressive. Now, I'm not saying we're going to go back to the highs. I am not saying that anytime soon. But could we see a 3 to 5% pop back?
Oh, sure.
Absolutely 100%. Reddit's gone from 220 to 110. Could this thing get back to 150, 160 in the blink of an eye? Absolutely. If traders are like, okay, we need to reallocate back into a little risk, a little AI, these things can fly. So, when traders are off sides, when things change, the chase can be really, really aggressive and fast.
One thing that we talked about a lot for the last couple of years is just like mountains of cash on the sideline. There's still 7 trillion in money market funds right now, just sitting on the sidelines that never really got engaged. So even aside from the proceeds of selling that we've seen, I think there is a lot of dry powder out there. So hopefully we see it deployed. Right?
I would agree with the dry powder. I think one of my things I've been saying for a couple of years, I do think, money goes where it's treated best. And there's still a lot of money, I think, that's going into bonds and maybe not money market funds, but even then. So it's if the Fed can get cutting again and some of the rates come down, I think that will help the risk reward for the market. But we'll all find out just by watching the market, honestly. I think
Yeah.
they'll figure it out. I don't think it's not the end of the world. We've seen it before. It's not nearly as bad as 3 years ago when Shopify went from what did it do, Jacob? I don't remember. 450 down to
I try to
100.
block out all those bad
Yeah,
times
yeah.
years
But
ago.
like, it's kind of like that, but it's just on a smaller basis over 3 weeks or whatever. So it'll probably take some time, to flesh out or whatever, but we'll get a sustained advance out of this.
Yeah, speaking of names getting hit, Meta Platforms was $88 a share. It was so low that Bruce Kaiser, our former Cabot value investor and chief analyst, was recommending it. Like that is how low some of these growth names got. I do think that we've been here before is probably a good approach to take. This is certainly not the first correction we've seen.
Just we see it all the time. I mean, it's been last year was a great year. And so, it's like there was going to be some payback at some point, whether it was tariffs or whatever. So, I mean, that's what the markets, in my opinion, that's what the market's latched on to, probably for good reason. But yeah, it's just the sentiment pendulum will swing back. Like Jacob said, people will be positioned wrongly or eventually want to change their position back toward growth, and hopefully some fresh leaders that aren't already up 800% in the last 3 years or whatever off their lows. And, so then the institutions kind of have to accumulate those for the next couple of years. So we'll be good. We just got to get through this and stay safe.
So as we mentioned, it's a correction now, or at least it was as of yesterday. I know both of you love looking in your crystal balls, but gut feeling, do you think we've already had bear markets in the 20s. There's never been a decade with more than three in the first 6 years. Less than 6 years would be quite a bit. This is Ryan Dietrich on Twitter stats. So a hat tip to him, but gut feeling, does this turn into a bear market? Another one?
So if this turns into a bear, does that mean we're done for the next 5 years?
Well, then we're definitely
we might as well.
done.
We're already halfway there. Let's just do it.
Yeah.
I don't know. I don't like the labels. I was in a conference call way back before I started at Cabot. Actually, I was an intern, and Ralph Akinpour was on. Somebody was like, "Oh, is this going to be a bear market?" And he's like, "I don't know. You can call it a banana. You say bear market. Some people think 2008. Some people think the fourth quarter of 2018. That was a 20% decline or whatever. So
yep.
I don't know if we hit 20. I think we probably have more to go, more adjustment to go. But my guess is we're probably getting close to like a bounce phase, and then there'll just be a lot of volatility and messiness and news-driven moves for a while to wear people out. And then, within a few months, I don't know if that's 2 months or more, but we'll have another sustained advance and go from there. That's just my guess, but I would guess that we're not bottoming right here totally, but I'm all for being wrong.
And there's going to be stocks. There's going to be names that pop up. I mean,
yeah, right.
Gilead and AbbVie. I mean, stocks that have been left for dead. Now, I know that's not Mike's best sign for the market, but I mean, there are stocks that are working even in this environment. European financials, which have been horrible forever. Deutsche Bank looks great. I mean, money will find a home. I promise you. So there will be names to find even in a bear market if that in fact comes.
Are you staying a little bit
stocks
more
holding up really well? Sorry, go ahead, Brad.
Yeah, are you staying a little bit more hands off with those, Mike? I know you are, with the former leaders, where it's like, look, that's going to be an opportunity for institutions that are still holding big positions to sell on strength. Jacob, are you sort of staying away from those, or are there still a few that are on your radar?
I mean, I'm always updating my list, so I have not done any new buying. The most recent buy I made was Gilead for the JPC service. That was 2 or 3 weeks ago. In the Cabot Options Trader service, I haven't bought in 3 or 4 weeks. So I'm not in any giant rush to chase. I'm updating this list. I like Okta, symbol OKTA. That's a growth name that surged higher in earnings last week, I think it was, and pulled back with the market a little bit, but is right near its highs again. Mike messaged me about ROOT. I think it's an insurance play. I mean, there are stocks that are showing signs of life. So, I'm just continuing to build the watch list. The worst bear markets are painful. They stink. But every single time we've seen this, Mike has found the next leaders. I found the next leaders. They start really standing out. It becomes almost obvious when the market's going to turn where you need to be chasing. So I'm sure Mike is building a watch list just like I am.
Yeah, I think Mike, your familiar refrain that you go to, which I've always liked, is that the next big up move is when a lot of the money is made. When there are all these bargains out there and money starts flowing in to all these stocks that have been unloved for weeks, months, whatever. Having that watch list ready and cash on hand. I know, Mike, you're very heavily in cash now. Being prepared for that big next up move spells opportunity, really, right?
Yeah, the big money's on the big swing. I mean, the big money, I mean, I don't know. Jacob's much better at a lot of things than I am. So, but like, I'm not great at the short-term stuff. So like to Brad's question, I wouldn't mind having a little bit less cash. It's pretty heavy in cash right now. So I wouldn't, maybe I'll do a little nibbling or something, but it's not my game to try to play a 20% bounce, because it's just, I'm not good at that. But coming out of this, there's going to be, like I said, fresh leaders that can go up. The big money's when you buy it early, the thing goes through, it has maybe one correction or shakeout you sit through, and then you ride it for 6 to 12 months and the thing's up 250% and you have a good sized position. I mean, that's where the real money comes from, as opposed to trying to get in and out after a week or two and you made 10% on something, in my opinion. So yeah, there's going to be leadership. And like Jacob said, it's easiest to spot strength in a bad market. Right now, most of that strength is defensive stuff, I think, which makes sense. But that's why when we're talking about like, oh, Palantir hasn't gone down in 2 weeks. I mean, that's can go away real quick, but that's kind of what you try to spot early on as just sort of a change in the stock's near-term character and buying power. And hopefully some of these names like Okta, Rubrik, and some of the medical names we've talked about, smaller biotechs and medical, device companies can be some of the names that, they're the next AppLovin, they're the next big winners sort of thing,
Yeah. Well, Mike, Jacob, thanks for joining us today. Hopefully you can join us down the road in happier times, and we can jinx another good bull market like we've done. So hopefully this does the trick in the other direction. But yeah, thanks for joining us. All right, we welcome on Michael Brush, who runs Cabot's Cannabis Investor Advisory, and has a regular column with Market Watch. You wrote the other day, Michael, for the Cabot site, something we need at a time when we needed some optimism. You wrote some good reasons why to believe that you may be nearing a bottom with this, market, well, now correction. That there's some contrarian angles, that there's some sort of indicators that suggest that the next big move might be up. Talk a little bit about that, what you're seeing and what you think could happen over the ensuing, weeks.
Yeah, I mean, you can never call the bottom. You can't
Right.
call top either. Although I have called the lows in markets in the past on almost the exact date, but that was just luck. I can't really take credit for that. But right now, I'm optimistic. I think say 3 or 4 reasons. One is, I follow 3 economists basically who I like because they generally tend to be more right than others, and that's the economist at Goldman Sachs, Jim Paulson, and Ed Yardeni, and they're all not predicting recession, and people are worried about recession, and so I think the market has that wrong. You got the Atlanta GDP now at contraction for the most recent quarter. That just on a technical basis, that's because there were a lot of gold imports, and imports detract from GDP, so that's kind of misleading. So that's one thing. People worried about recession, probably not going to happen. 2, we got a lot of negative sentiment, and that's a good contrarian indicator. We got a nice magazine cover indicator earlier in the week, and insiders are quite bullish. So that's 3. And number 4, Trump is big on tariffs, and that's what's causing a lot of the problems. And there are reasons, I think there are good reasons to think he might blink, he might back off of that. So, we can delve into any of those, but those are kind of the four basic reasons.
Can you talk a little bit more about the magazine cover indicator?
Right, right. Yeah, so this is just an old classic concept, and there are many, many examples of the media featuring a market decline or a top, right at the bottom or the top. And, journalists are so hated these days, it's going to be immediately tempting for everybody to think, oh, yeah, because journalists are dumb. That's not really why. I'm sure some of them are, but that's not really why. It's more that they're very good at being attuned at what people want to hear and read about. The editors are very good at that. So naturally, when people are most freaked out about the market, they're going to move that story out to the front page or the cover. And we got the classic one is the roller coaster, right? And we got a nice
Yeah.
one from the New York Post on Monday, that pretty bad selling Monday day, where they had Trump going down and a roller coaster tie flying over his neck. So that was a good one. Also, the evening news. I still watch the evening news mainly just to get a read on sentiment and cultural trends. And it came out to the front story on all three. So that was a pretty good sentiment indicator right there of a sign of a bottom.
Yeah, it's interesting that consumer sentiment, out today was way lower than expected, lowest reading since November 2022. That happened to pretty much coincide with the bottom in the bear market of 2022. It's right around the time that this bull market started. So that's a little interesting, and that's one other. If you're looking at it from a contrarian perspective, that's another reading. Talk about, you mentioned insider buying picking up. What are you
Right.
seeing there?
So insiders, I follow insiders every day. I look at every purchase over 100K, and I look at the nature of the buying at that company, whether there is a cluster buy, size buy, the records of the insiders, because it's a great way to find new stock ideas. And so, I'm very attuned to the insider activity, and they have just been on hiatus since, maybe I would say last summer. And in the past week or two, they've really come back in a big way to purchase stock. And what's interesting there is I'm talking about real insiders. They're not the beneficial owners who tend to, they're investors who own a lot of stock, basically. But I'm talking about, directors and C-suite. And the other interesting thing there is there's a lot of size buys. There's a lot of purchases of $1 million or more, which is not really that common. So insiders have turned pretty bullish. And also one other thing, they're definitely focused on cyclical stocks. In other words, the kinds that would do bad in a recession. And they're kind of saying, we don't really see it.
Mhm.
A lot of what you're saying is consistent with something that I had brought up with Mike and Jacob, which is this environment feels like a lot of profit taking, and then the maybe institutional money looking around and saying, well, it's sort of the end of the easy money era, but we don't see the wheels falling off. We just see a tougher environment that's a little bit less favorable. Which sort of brings me to Yardeni,
You're
who
Denny.
Yardeni, who just lowered his upside target on or his year-end target on the S&P, but I
Right.
think it came down to 6,400, which is still, it's almost 15% higher from where we are now, 12% higher from where we are now.
Right.
Where do you land on the sort of overall environment? Are you worried about the wheels coming off, or are you thinking more bullishly for?
No, I'm bullish here. I think we got a good sentiment read on a contrarian level, and I don't think we're going into recession. You know, people are really worried, including the consumers, are really worried about the uncertainty of the tariff situation. And I just got to think if the market falls a lot more, or if voters start to turn on Trump, he's gonna have to blink. Now he needs face saving. He's got that kind of personality. That's what troubles me. Like, where is that going to come from? But I don't think we go into recession, and he's always got to worry about the midterms. And if voters start to defect because they don't like the consumer tax of the tariff, which is basically what tariffs are, you know, he's going to figure that out, and he's going to need to back off the tariffs. So I think the tariff threat is overdone, but I don't know, could be wrong.
Yes, I mean, seems like the his reputation of being of loving the stock market may be something that is working as a backstop for this slide right now, or at least in theory. You would think you would eventually work in his own self interests, and like you said, as more voters sort of turn on him. Gut feeling, do you think so? The market, as we're recording this, it hit a new low yesterday. It is up almost S&P up almost 2% as we speak. Nasdaq more than 2% today. Do you think we've put in a low yet, or do you think there's still some more shaking out to happen in the next couple of weeks?
Yeah, I think we're kind of there. I don't really know, but barring some unknown, I think we're sort of there. The one thing about this really wicked volatility now is that generally, historically, when there's wild volatility like there is now, the overall returns tend to be lower over the medium term, a year, let's say. So that's a little bit troubling, but I think the market is more of a buy here. I would just wait for a weekday, WEAK day to buy, because you just wait and you're going to get a better price the next day. People are nervous, and that explains the wild volatility. But I think that can work in your favor if you're building positions. We all, when the market's strong, we all want to buy. Price action brings out action, right? So when stocks go up, people, they get it. People get it exactly wrong, and I make this mistake too. When stocks go up, you want to buy, and when stocks go down, you want to sell. But really, you should be kind of doing the opposite. And I think having that discipline will help a lot as you build positions here.
Brad, any final questions for Michael before?
Just want to see if you had any perspective on European equities at all. It's not something that you and I have discussed, but I know that they've been catching a bid and there's been a lot of momentum over there. Is that something you watch at all, or are you looking more globally or predominantly still in the US?
Well, I like China here. I think the government's going to continue to come through with stimulus, and so that's one area that's interesting. It's also kind of out of favor. Europe is interesting. Jan at Goldman, the economist at Goldman, he definitely highlighted economic strength in the Eurozone. So I don't really follow that closely, but I did notice that he's kind of bullish on Europe, and he's a good economist.
Yeah.
Yeah, European stocks, to your point, Brad, up 7% year to date. Pulled back a little in the last couple of weeks, but that's a far cry from the S&P and the Nasdaq down, what, 4% or 3-4%, whatever it is right now for the year. Last question, Michael. I guess, do you think you mentioned the Trump part of it? You sort of at some point acting in his own self-interest and what level of pain he was willing to tolerate. Do you think S&P hitting correction yesterday, could be sort of a breaking point for him? He hasn't said anything today, but do you think that could be sort of a breaking point for him, or for investors forcing him to do this?
I kind of feel like it is because he didn't answer that question when he first got asked. I think it was on Sunday. Do you think we'll get a recession? He didn't answer that, and that disturbed the market. That contributed to that Monday selling quite a bit. And I think he noticed that, and the people around him noticed that. So he came out Tuesday and got asked that question and responded and said he didn't think there was going to be a recession. The one thing that disturbs me about that whole crowd is that a lot of us are down quite a bit of money and we're not feeling good about it. And their messaging, from their press secretary, from the Treasury Sec, and also Trump himself was like, markets are down, no big deal, we'll get over it. But for a lot of people, it really is a big deal, and that kind of attitude, I think, also bothered people. And I believe you're right. I believe that's changing. I think we'll see a tone shift, but we really need the tone shift on tariffs, and we'll see how that comes around, because that's what's bothering everybody about Trump. aside from the policy chaos that bothers people as well. But I think I think when he breaks on, he's broken on. He loves to. You're right. He loves to use the stock market as a gauge of his success and brag about it. So I think he's finally come around to realizing, what's happening may be a problem. The next break we need is on tariffs, and I believe we'll get there. But we're not there yet. So we got April 2nd, those tariffs on April 2nd coming up, and anyway, fun ride, right?
Fun ride. Well, I definitely appreciate your optimism. We really could use it on here. Brad and I, when we sat here a week ago, we're in a pretty dark place. So we're like, we need to get some more positivity in here. So that's why we're happy to have you on. Thanks for your optimistic and contrarian perspective, and hopefully we'll be sitting here in better times, weeks or months from now.
Thank you, gentlemen.
Thank
Thanks.
you, and we'll see you for next week's Street Check back here next Friday. Thanks for joining.